Hey YouTube, it's time for another market recap. I apologize in advance for my voice. I have a bit of a cold, but yeah, let's go ahead and dive in. So similar to last week, I wanted to start kind of high level and talk about VTI, the Vanguard Total Stock Market Index, VIX, and Bitcoin, and then we'll dive into some of the volume leaders data. But if you watched last week's recap, you'll remember me talking about VIX and basically saying that if it was going to rise, if the market was going to see increased volatility, more downside, that it would have to happen pretty quickly. And then, of course, on Monday, we saw that huge downdraft and really just a lot of selling, a lot of panic in the market. And then since then, towards the back half of last week, we've been bouncing. And so I like to look at VTI just kind of as the high level view of the total market, at least as it relates to the US. We can see here that we have one gap that was filled, and now we have this second gap right around 265 to 267 or so. We'll see if that gets filled this week, but I think that this is really kind of the line in the sand where you really want to see price get back above probably this level here, 267, 266, maybe even, 270, before we can say that that was just a one and done, a V recovery. Really what I think is more likely is potentially another downdraft, and then we see what happens around here. Whether we get a bounce and a W or an Adam and Eve bottom, or we continue lower. One thing that I like to do, you'll notice on some of these charts, is I like to set alerts and then also set notes for myself. So watching, the monthly close on this in particular, closing between 255 or even 250. Those are kind of the lines in the sand for me. And you'll notice on the right-hand side, the volume profile and the volume shelves. I really like this because this shows us areas of support. So you can see here this volume peak on this volume shelf was right around where price started to bounce. So again, if we do move lower, I'd probably start looking at, the 230s or maybe the 220s for areas of support to move back higher. Again, last week we talked a little bit about the potential for a head and shoulders here. So, we really need to see what comes this week. Now on the VIX, so we saw quite the spike up. I believe this was, I think, pretty historic. Only 3 or 4 times has this happened over the last 20 years where we've seen VIX spike up so dramatically. Obviously, COVID was one of them, and then the Great Financial Crisis. A big driver here was the Central Bank of Japan raising their interest rates, which had been, historically at lows for a very long time, leading to the yen carry trade, or basically arbitrage. There's a lot of good videos out there on the carry trade, so I won't belabor that point too much. But now what remains to be seen is if we see this continue to trend back down into the lows, 15 and below, or if we see kind of a second wave up. So, on that note, I mentioned last week that I really like watching Bitcoin kind of as a litmus for the risk on or risk off sentiment across the market. Here you can see I have some Fibonacci levels annotated. Saw quite a strong bounce, pretty strongly correlated with the rest of the stock market. But now we're seeing resistance kind of coming in this fib level here, and really similar to VTI, just looking at the charts and kind of thinking about levels, right? So the level here for me would be 62 to 63K, wanting to see price reclaim this before I start thinking about, another retest of the recent highs at 70. And then again, getting back above 70 is when I'd be a little bit more confident about, making new highs. Here we can kind of see this resistance right here. So, maybe a breakout and then a retest here to confirm maybe this is the level that if you want to play this conservatively, that you would get long. So with that said, again, if we see Bitcoin continue to move down over the coming weeks, I think that this will be a good indication of risk off sentiment. And again, I have another annotation down here by this volume profile peak, low 40s, around 42, 43K, where if we do get to that level, I have some alerts and would probably get long for a trade. So now looking at the SPY, so there hasn't been any, top 100 trades recently, but I do think that this one is interesting because, again, you tend to see the data and these trades kind of showing up in volume leaders around key points, right? So here, this potentially was a sell. We saw quite the downdraft. And then this was, last week, And then number 70 here, potentially a buy. We see price kind of trending up. And then here we see these two large orders. Now we don't know if they're buys or sells, but potentially if price starts to resolve lower this next week, I think that there might be a good indication that these are sells. Conversely, if price can get back above the 535 level, maybe it's an indication that these are buys and we continue to resolve higher. So SPXL is a 3x bull ETF on the SPX. Again, you'll obviously see some similarities in these charts. So this is the 30-day, where the last one we were looking at was the 1 week chart. We had a number 1 come in at the lows, and then a 10 and number 43. So then the question here really is, whether or not someone was buying down here, or if someone is capitalizing on this bounce, potentially a dead cat, to exit. So again, watching this level, noticing that this volume shelf, or this volume profile peak right around 134. So this week, if price starts resolving up, potentially we can see a retest of 145 or so, 140 to 145, filling this gap. And then if it starts to resolve lower, then really what you need to do is start looking at this 120 level down to 115 and seeing if we get a double bottom here. If support holds, then maybe that's a good point to get long. Again, if we lose this level, though, it's hard to say where the bottom would be after that short term. All right, so now we have SOXS, which is the daily semiconductor bear 3x. So another inverse ETF. Now here we can see there was a number 1 ranked trade early last week. And we can see the prices kind of pulled back a little bit, obviously correlated with the bounce. So NVIDIA and the rest of the market has bounced off the lows. So this bearish ETF has pulled back. But you'll notice that the price is starting to consolidate right above where this number 2 level was, right? Or this number 2 ranked trade. So here we can kind of look at this level as a key level. So I believe this was right around $28. So again, similarly here, just watching this level right around 28. If price continues to hold that as support and then starts to move back up, maybe SOXS is good for a long back to retest 34, 35, and then kind of see how it reacts around that level to decide whether or not you want to stay in or take profit. All right, and then I've noticed this week a couple airline larger trades. So here we can see Love or Southwest Airlines. We have a 14 and a 91 rank trade. Again, here it's a little bit too early to tell exactly what these are. You'll notice that they kind of line up with this 32 rank trade, all of which are right around 25. So again, I think that's a nice round psychological level, right? 25. So failing to hold above 25 would probably be bearish. But then again, I was looking at some of the higher time frame charts for the airline industry. There's an ETF called JETS, JETS, and it looks like potentially the airline industry is trying to bang out a bottom. So again, seeing Southwest get back above 25, maybe we can start to look at a retest of 27. But really, this 25 area will be pretty key. Similarly, in the airline space, we have Delta Airlines, DAL. You'll notice the charts are very similar. We had a number 3 ranked trade come in at the lows. Similarly, it has a gap that has almost been filled, or if you count these wicks, it has been filled. So again, here what I'd look for is it resolving higher, maybe breaking 40. If it can do that, then potentially 43 or so is on tap to retest the bottom of this volume shelf. Obviously, Southwest and Delta Airlines will be correlated, being in the same industry. So it should be an interesting couple of weeks for airlines. All right, and then now we have Vista Outdoors. So there's number 6 ranked trade. We can see that over the last year, this has been in quite a strong uptrend. Really what I would do here is maybe draw a trend line connecting most of these lows, kind of omitting this one, and then looking to see if that trend line is violated. Then potentially we could look at this as being ahead, right? Coming back down to retest that 34 level and then seeing how it bangs out potentially that right shoulder. But here, this is in the consumer discretionary space. And I think overall, what I've been seeing from the data is it appears to be there's more sells from consumer discretionary. There's been buying in precious metals and commodities, as well as energy, and not a ton of buying yet of tech, or at least like FANG. So I think all of those things kind of do point to further downside for the market, and investors kind of being a little bit more cautious or risk off. So speaking of precious metals, we have gold. GLD is the Spider Gold Trust ETF. We can see a number 3 ranked trade came in early last week, kind of at the lows, and we've seen price resolve higher. Similar here with PSLV, which is a physical silver backed ETF. Again, we have a 43 ranked trade and a number 2 ranked trade here at the lows. I think, it definitely seems like precious metals, gold and silver particularly, might be starting to get some interest, which again, when you think about the dynamics between precious metals, commodities, et cetera, and energy, and their kind of inverse correlation, generally speaking, with the rest of the market, this does kind of signal a cautionary stance across the investor base. And then we also have IAU, which is another gold share trust. Similar thing here, number 1, number 2 ranked trade, price resolving higher. So I think all of these things point to some renewed interest in precious metals. And then on the energy or oil side, we have XOM. Now this one zoomed out to the 1 year. There haven't been any very recent trades, but I have kind of seen thematically a revived interest in energy as well as oil. And, I wanted to show this chart, especially the high time frame view, because I think that this is fairly bullish price structure, right? Again, you can see a number 1 coming in at the relative lows or quite near them. Number 15 before a pullback. The pullback tests that number 1 level, finds support, and then continues. And now it's kind of been chopping here in this, channel type formation. Here we really have a very clean level where if Exxon can break above 120, then potentially go back and retest the highs at 124 to 125. But overall, you could even potentially say that this is a cup and handle. So again, money and interest flowing back into energy and oil, as well as precious metals. I think really the next week or two, just kind of the best thing to do is just take a more cautious wait and see approach. The options market, obviously with VIX having coming back down, has normalized somewhat. But again, I think, there's a lot of uncertainty right now in the political space, as well as what's going on with conflict in the Middle East. And then we have CPI coming out soon, which could, deal a blow to the market as well. So yeah, if you have any questions, feel free to leave a comment below, and thanks for watching.